Hi, it's Graham Bibby on the 21st of August coming to you with a market update, trying to make sense of what's going on in today's market. So let's start off by looking a little bit at the US. This is coming up now as the NASDAQ, the technology heavy laden index in the US. And I'm showing you the US because the US kind of is the dog or the tail that wags the dog. Wherever the US is going, most markets seem to follow these days. And you can see here, down the bottom here, this is June. At the end of June, it was all looking a bit neg. And then from that bottom where the arrow is, we kind of had this surge, especially through July. But since July, we've kind of just been trading sideways. S&P 500. Again, this is a bit of a sell-off, back to where we were. This is the major run. We've only had a run from here to here, really, which is something like 50 points, which is 2 or 3%, 4% maybe, and then largely sideways. So we've been in this hold mode, if you like. This is the Australian All Ordinary Sydney Index. And I just want to show you here, going back to October of last year, it's been gyrating up, then down, then up, then further down, then back up to where we were at a peak, and then down to even lower levels, then back up, then down, then up, then kind of sideways, then kind of down. And then we've had the run like the US did, because I say most markets are following the US, and then we've kind of been going sideways. So yeah, not terrific news. We need to see a bit of movement, but we're in the summer lulls. Here's BHP Billiton. I know a lot of people in Australia hold this stock and Rio. These are not the best stocks to hold for the rebound. I know a lot of people will have suffered because a lot of people held through this decline. This is a decline here from, well, at one stage, 80, back here in 2013, and it went to well below $20. So it went down about 80%. And that's why I don't believe in buy and hold, because even if you haven't sold, that is down 80%. And if you came out with down 10%, you wanted to reinvest, you could have reinvested somewhere around here, and you'd actually be in profit right now. The overall trend looks up. This is moving up, but it's not moving up at the same momentum as other things. So beginning of the year, we had the run here to February when it went up 50%. And then largely we've been going sideways. We're up a bit higher than that right now. Let's say we're up 54% since beginning of this year, or not even the beginning of this year, sorry, February. January, February lows, 54% since those lows. Because if you take the beginning of the year, we're not up that much. And the reason I go where I go, because I'm looking for the investments with the best return. So this is the area for gold and silver, and we have been in things like this stock, which was 2016. It's $8.63 even with the pullback, which is 4 times your money, 400% against BHP 50%. So, if you want to be in that area, the resources to benefit, you need to be in the areas with the best upside momentum. And that is not BHP, and it's not Rio Tinto. Let me show you here First Majestic Silver. Again, in February it was 2. It's 15, even with the recent correction. So that is over 7 times your money, 700%. So let's say you held $20,000 worth of BHP currently since February. So now you would have roughly 30,000 worth of BHP. But if you've been in this stock, your 20,000 will be 140,000. So it's all about momentum. It's all about being in the right place at the right time. Now silver is looking a bit of a concern because this moving average, this line here, this purple line, averages out these price movements here, and since the February breakout we've been above that average. Well, on Friday we slipped below it. Now, I always say you only know what you know, you don't know what you don't know. That is disappointing because I think 16 should have held. It would have been ideal if we held up here just below 18, but we didn't. And things like Nuggets and JNUG, which has risen since February from 25 to 149, and at one stage here it was 175. We're still holding above this average. We kind of was on it here because we dipped below but stayed on it. We did go below here. That was a false breakdown and off we went again. So, a bit disappointed. Things like Uranium Corporation, still finding it difficult to get real upside momentum. So let's just show you again where that's come from. If we go back to the peak, which is here, oh, let's zoom out a bit. The peak here, when this stock was $8, it's $1 now. It broke out down here. It's above its moving average. It's looking fairly good. I'd really like to see some upward momentum happening now. But on this day here, which is a volatile day, if I could zoom out, the stock ended here with that arrow. See that line? That's where the stock ended on the day. So it went down to challenge this moving average, which if it's pointing upwards, normally means the stock's more likely to move upwards and it's giving it support. And we've kind of consolidated around this level. Now, I'd like to see us move above 110, and then I think we have another major move in store. If we break down below it, then I'm going to get disappointed with the resources sector again, but I won't just hold on. We'd have to exit. So right now, in the Insiders Club, I just want to show you a few more things. I talked about emerging markets, which are in my FOS service. So semiconductors, boom, new high. So I've got three services: undervalued with superior earnings, dump. I've got ETFs and exchange traded funds, which this is. And then I've got special situations, and I've got my most popular service now, the mirroring account, which mirrors everything that I do in my account. TNA, smaller companies, at near new high. Is in the fund side of things, ETF side of things. Indonesia, again, strong rise since June. Not at high, come off the high bit, but on, we need to zoom out a bit further. On Friday, it was a down day, but ended on the high of the day for that day. So that, to me, looks quite promising. Thailand, same thing, looks quite promising. Emerging markets through this 3 times leverage ETF looks very promising. It's at a new high. I think this is very strong. I think there's lots of gains to go for here. And even things like Apple that have been sold off by some of the mega holders is now appearing to be in an uptrend. But Skyworks makes most of the components for Apple, so that's been our preferred buy. Last week we moved into Skyworks. It's broken out, and it's outperforming on a daily basis Apple. So it's been a bit of a disappointing week. I'd just really like to see some more powerful upward momentum. This week's going to be a decider, but you really should diversify. I encourage you to do my mirroring account. I encourage you to do exchange traded funds because we're looking at global markets, and quite a few of those have been beaten up. And we have 1 or 2 very good private placements and some undervalued property where we're buying land. 60% were below what someone paid for it 7 years ago in an area set to boom. So it's Graham Bibby here on the 21st of August 2016 saying you've got to be in it to win it. If you're not in it, please join. If you'd like to have a one-on-one Skype call, please message me and we'll set it up. So over and out from today, and have a great Sunday of rest, fun, and joy. Thank you. Bye-bye.